Time for a look at the day's top business news. We're starting today with really escalating rhetoric between the US and China as the trade war between the two countries heats up. France 24's business editor Brian Quinn here to bring us up to speed with the latest.
Once again, Stuart, Beijing released an official white paper blaming the U.S. for the trade war between the world's top two economies. Higher Chinese tariffs on $60 billion worth of U.S. goods went into effect over the weekend. That following increases on U.S. tariffs of $250 billion worth of Chinese imports last month. Beijing says it's creating its own blacklist of, quote, unreliable foreign businesses and individuals following a wide-ranging U.S. ban on Chinese tech giant Huawei. China also investigating FedEx after accusations by Huawei that the shipping firm diverted its packages from their Chinese destinations to new ones in the U.S. Chinese government sources over the weekend kept the door open for new trade talks, but insisted their country won't be bullied.
We are willing to work together with the U.S. to reach a mutually beneficial agreement. Cooperation has to be based on principles. There are bottom lines in consultations. On major issues of principle, China will not back down.
Well, meanwhile, Donald Trump opening a new front among America's now numerous trade conflicts. Trump has threatened tariffs on imports from Mexico if it doesn't halt the flow of illegal immigration across their shared border. 5% tariffs starting on June 10th, eventually rising up to 25%. That posing a serious threat of recession to Mexico, which sends 80% of its exports to the U.S. The Mexican trade delegation is set to begin high-level talks on Monday in a bid to defuse the situation. Here's Trump Sunday.
Mexico is making hundreds of billions of dollars for many, many years, and they have to do something about the border. Everyone's coming through Mexico, including drugs, including human trafficking. We're going to stop it, or we're not going to do business, and that's going to be it.
Time now for a look at the markets. International investors definitely spooked by that mounting trade tension. Over in Asia, the Nikkei in Tokyo closing down nearly 1%, with shares in telecoms giant SoftBank down nearly 6% on reports of fundraising trouble. The latest Chinese manufacturing data missing analyst expectations. Hong Kong's Hang Seng down around 0.1%, similar for the Shanghai Composite. The Kospian Seoul, the lone bright spot, up over 1.25% as Samsung shares gain over 3% there. European indexes following that largely negative trend. Investors looking out for new PMI data later today. London's FTSE 100 down around 0.2%. CAC 40 here in Paris and the Frankfurt DAX both down just under 0.6% at the open. Next, the global airline industry's biggest trade association has trimmed its profits forecast for 2019. Airlines are expected to clear around $28 billion this year instead of the $35 billion originally predicted. The International Air Transport Association pointing to rising trade tensions as a key factor. Andrew Hillier has more.
A gloomy outlook is on the horizon for the global airline industry. The International Air Transport Association, the body that represents more than 80% of air traffic, expects the sector to record its lowest profits in 5 years. It estimates that this year airlines will make a profit of $28 billion, down from the figure of $35.5 billion originally forecast back in December. The main culprit, rising trade tensions between the world's two economic powerhouses, the US and China.
Passenger demand is robust, but trade wars and protectionist measures are taking their toll on the cargo business. And rising costs for fuel, labor, and infrastructure are squeezing margins.
Donald Trump's escalating trade war with China has seen demand for air cargo dropping across the board, in a downward trend that's set to continue for some time. But with passenger growth expected to keep rising by 5% year on year, that could offset the drop in demand for air freight.
Demand is forecast to double over the next 2 decades. With the cost of travel 40% lower than a decade ago, the freedom to fly is reaching more people than ever.
Another headache for the air industry, the Boeing 737 MAX. The aircraft was grounded worldwide after an Ethiopian Airlines jet crashed in March. That crash came barely months after a Lion Air jet went down in Indonesia. Since then, Boeing has been desperately trying to get the airplanes back into the air.
Finally, for business, could it be the end of an era? Apple is holding its annual Worldwide Developers Conference Monday in California. On the agenda, reportedly, an end to iTunes. Bloomberg reporting that the 18-year-old service will be retired in favor of 3 new apps, Apple Music, Apple TV, and Apple Podcasts. Once a revolutionary music downloading platform, iTunes has been overshadowed in recent years by the explosion of streaming media. Apple's still playing a bit of catch-up there. The Apple Music app has just 56 million paid subscribers worldwide compared to Spotify's 100 million. Stuart, I remember when Napster came out and it was a big thing back in the day.
Still use iTunes.
I had a 100 CD changer at one point.
Oh, really?
Yeah, to get rid of that when all this came about.
Mr. Tech, Brian Quinn. Thanks a lot. Right with Business on France 24. Alice